everyone. Welcome to the LFW Network. I am very, very honored and very privileged to have here today Representative Joe Courtney. As many of you know, we are a military family and we recently moved to Connecticut because my husband is active Coast Guard. So by default, living in Connecticut, I had the pleasure of meeting one of our very, very important representatives from this state. So I wanted to thank you so much, Representative Courtney, for joining us today. I wanted to ask you a few questions about my favorite topic.
Yes, sure. Well, first of all, it's a pleasure to be with you.
Thank you.
And, you've already made a big impact in the region, honestly, since you've been here. I'm not really just saying that because you invited me to your podcast. And your husband obviously is doing great work, for one of the pillars of this region, obviously the Coast Guard. So
that means a lot. We really appreciate it. I looked you up. I stalked you on YouTube and I found videos as old as like 8, 9, 10 years old, where you've been pushing for student loan reform. So I wanted to get, before I ask you about your bill and what you're working on, I just want to get a sense from you what this challenge has been like for you in trying to get help for student loan borrowers.
Everyone has their own journey, how they get to the U.S. Congress. And, mine was one that it took me 2 tries to get elected. And the second time when I finally won by 83 votes out of 241,000 cast, which if any of your listeners really are sort of wondering whether your vote counts, call me because, it was the closest margin actually for a general election for the House for almost 20 years. There was one in Iowa last cycle that actually was 6 votes. In 2006, at the end of the campaign, one of the key sort of constituencies was the college campuses. And at that point, we were sort of hitting in the student borrowing world another sort of cliff where interest rates were going to be spiking up to 6.8% for undergraduate Stafford student loans. And at the University of Connecticut campus in particular, one of the big issues we campaigned on was a bill called the College Cost Reduction Act, which blocked that increase and brought it down to 3.4%. And that campus was actually probably my best precinct in the whole Eastern Connecticut district. And so, I always, when I'm up there, I because young people's voting turnout levels is still a little, challenging and unsatisfactory, but that it makes a difference when young people vote, because these issues otherwise, just sort of get lost in terms of what other constituencies care about. So that bill passed. It was signed into law by George Bush. Actually, he was president at that time, and but it was a 5-year term in the legislation, and and we've been sort of on this roller coaster ever since in terms of because the base law in the federal code is 6.8%, and so that kind of keeps sort of threatening to sort of get to that place. And finally, in 2013, when we were going to again hit another sort of cliff in terms of people's finances, we passed the Student Loan Certainty Act, which avoided that. President Obama was in office at that time. I was actually in the Oval Office when he signed it into law. And that sort of tied interest rates to the Treasury Index 10-year notes, which at the time did provide relief and avoided the 6.8%. But and we've been in a low interest rate environment for a number of years following that, but we're not today. And so, and then COVID, and we had the student loan pause for almost 3 years, which has now come to an end as of October of 2023. And in the meantime, this sort of mounting debt levels in people's portfolios just continues to grow. I checked yesterday; it's 1.6 trillion.
Oh my God!
In terms of there's
my
really,
heart just hurts.
It's a staggering number. And,
wow!
And that's bigger than any other form of consumer debt. Whether it's cars or credit cards or anything like that. And and as I said, with the end of the pause and the higher interest rate environment that we're in right now, I mean, we're sort of really back on the treadmill of this continuing to mount. And it's really had a very negative impact in so many ways in terms of giving people a chance to actually start their lives, senior citizens who are
Still
still,
paying.
yes. And so it's,
Right.
and it's been a tough issue. We had an attempt to try and have actual loan forgiveness, which, again, was only partial, and that went all the way to the Supreme Court. And, today, as we sit here, we're, as I said, in a situation where, with the pause ending, this problem is going to continue to mount, and we've really got to get serious about trying to do more than Band-Aids.
Absolutely. So tell me a little bit about the Student Loan Interest Elimination Act.
Sure.
I learned about that for the first time through you and when we met. But I've also since then done videos about it, talked about it with some of our followers. And I've gotten questions, I've gotten comments. Of course, you get a little bit of both sides. I have people that are saying that doesn't address the entire problem, but I have other folks, including myself, that feel that a break on the interest or eliminating the interest that has just kind of mounted out of nowhere would be a great help. But I also think that's because I'm actually trying to pay back my student loans. I've been very clear with our listeners, and I've been very clear with people that I've talked about on this topic that I agreed to take out the loan. And so my intent is to pay back my loans. And I would like to see a way that our federal government could work with those who are making a goodwill attempt to pay back the loans. And so that's why I was so excited about your bill, because I'm like, yeah, I could pay back my principal. I can't afford to pay back at that time $52,000 extra on student loan interest. So tell me a little bit about what I have acronymed SLIEA, because you got to be up with your acronyms now. If you don't have an acronym, no one's listening. But tell me a little bit about, the Student Loan Interest Elimination Act, how that kind of came together, and maybe a little bit about where you are now. I wanted to ask you about challenges, because I'd also like to find a way to help and see what we could do to help you get this a little further along.
So, I think as certainly an attorney, and a lot of your listeners know that consumer debt, residential mortgage debt is really a pretty integral part of American life. I mean, it's just and debt financing, as long as you have it, somewhat under control, is a way for people to, succeed and thrive and grow.
Right.
But one of the mechanisms that, for most other forms of debt that helps sort of mitigate costs over time is refinancing.
Right.
So when people sometimes first home buyers or whatever take out a mortgage, and it's got a pretty high interest at the time because the underwriting says that that's where you belong.
Right.
But over time they're in a position where maybe it's a lower interest rate environment,
and you can refinance
and bring down your costs.
Right.
And that helps you, pay for other bills, etc.
Right.
Student loan debt, which today is, predominantly government owned, because the Stafford Loan Program, which used to be, when it first started out, the government originated the loans, but then the banks originated the loans, and then it got handed off to the government. At some point, there was a decision made, well, that's just wasting money, because the banks are not really performing any real function like a normal bank. So now, again, it's almost completely government owned. So, the question that came up particularly, as I said, interest rates, were going down close to 1% and 0%.
Right.
People were still paying Stafford loans, government loans, at much higher rates. It's like, well, how come we can't do what we do with other forms of debt? And that would help sort of really, at least for, a portion of the borrower population, which is about 40 plus million people.
Yeah, me included.
would help sort of provide some relief. The way the law is structured, Congress actually has to be the entity that changes the interest rates.
Right.
And so a number of us have been trying to push for refinancing for a number of years, which maybe you saw in some of those video clips. But
and I just want to make clear, Congressman Courtney, you're saying that because the actual interest rate, like that 6.8, that's actually encoded in the law. So in order to change the law, we need Congress to make those changes and to legislate. So I want to make that clear, because I hear people in the media, but my interest is this, I can just refinance to this. You're doing that with private banks.
Right.
With the
Thank you.
government,
Yeah.
it's a different story. So you're essentially selling your debt to SoFi or these other, refinancing companies. And they're just buying the debt. So they're offering you a new interest rate, but you're not doing that directly with the federal government.
Correct.
You're kind of, I know this because I'm stuck with my interest rate.
Right.
Yeah.
So, so over the years, we've had, refinancing bills that we've introduced. And I mean, one year, I think we had close to 190 co-sponsors in the House. But again, because it's government held debt,
Mm-hmm.
and because the interest payments go to the government along with principal payments, it has a budget impact.
Mm-hmm.
That all goes into the Treasury.
Okay.
Okay, and
Mm-hmm.
the Department of Education, who owns the program, I mean, they incur costs. So when the budget offices analyze, the numbers and everything, they treat that as sort of an offset to DOE, to Department of Education's
Right.
overhead, and for bad debt that
Mm-hmm.
some debtors just disappear or
Right.
whatever. But the fact of the matter is, it all goes into Treasury. It's just in one big pot of money. So at some point, I think, having been through, the College Cost Reduction Act, the Student Loan Certainty Act, the efforts to try and get debt refinancing, when COVID hit, we also were trying to, again, either extend pauses or create the pause, which the CARES Act did, by the way.
Right.
So, but it just seemed like, for some of us, it was just, why, stepping back from this, why does the government get to charge interest for what is still fundamentally a program that was created to achieve a public policy goal,
Right.
which was really to provide access to higher education
Mm-hmm.
for people who come from families that don't have the collateral or property or equity
Right.
to put up for a regular bank loan.
Right.
And I don't think there's a justifiable answer for that. Why
I would agree.
there should be interest paid on top of whatever
Right.
the debt was incurred. And we looked around, and there are countries like New Zealand that is just a pure principal only student loan program that they operate
Right.
there. And so with that in mind, we met this organization up in Boston, the Hildreth Institute,
Yes.
who have some real sort of debt and economic experts who felt the same way, that
Mm-hmm.
that if you're dealing with a situation where you have almost unmanageably large levels of debt, whether it's a developing country or whether it's a
Right.
business in distress or whether it's student loan borrowers,
Mm-hmm.
the first thing that you try to do when you're reorganizing is just get rid of the interest.
Right.
And they came to us, and we worked together, and the Student Loan Elimination Act flowed from it, and it includes, which I'm sure we can talk about for a minute, is
Yeah.
the fact that this is not just a pure hit on the budget and create more deficit,
Right.
or has to be paid for through taxes on other Americans who don't have student loans,
Mm-hmm.
because that's always been the stumbling block
Right.
with refinancing bills. It's just like, well, who's going to pay for the lost interest? That the Treasury
Okay.
is going
That
to
makes
incur.
sense. Yeah. I always say this on these shows because I really do believe this. There is no free lunch. If we forgive, if we cancel, we pick up the slack somewhere else. So I imagine that was when you were saying that, I was like, this really makes sense to me, that this could be a challenge, because it's the money doesn't just disappear into thin air. We have to
Right.
we have to pull from something, or we have to add to something else. But it's really just being shifted around. I think now it's just so much.
Right.
it's
Exactly.
it's in an amount that, 1
Staggering.
trillion. I mean, my
Yeah.
goodness,
Yes.
where do we even begin?
Again, there's a political problem that's created if you're just adding to the deficit to
Right.
solve a problem. And so Hildreth came forward, and they said, okay, let's look at this through the lens of different programs that the federal government operates. And the Railroad Retirement Fund was the example that sort of, I think, is the best analogy to our bill,
Right.
which is basically it's a federally administered retirement program, goes back many years for railroad workers,
Mm-hmm.
and people make contributions to that fund out of their payroll, and
Right.
their employers contribute to it as well. They take that money in that fund, and they have the trustees who administer it, and they have to operate with very conservative, low risk
Securities kind of in the market.
correct, in terms of how they invest it.
Right.
And they get a rate of return, and they use that to make sure that the fund is solvent. And
Right.
the Congressional Budget Office, who we got a report from on that fund, certified that, yep, that's totally solvent for whatever the actuarial time frame
Time frame
like
is
25, 50 years. Whatever.
right.
So when you think about the amount of money that's coming into the government on principal
Mm-hmm.
payments through student loans,
Right.
borrowers, that money is really not doing anything other than just going into the Treasury to pay for everything else. So their
Huh.
plan would be to take that money, create a fund,
Right.
which again is owned by the government.
So it's still all the same pot. It's in the same place.
That's it. The accounting still keeps it as
Right.
as part of the on the plus side of the ledger sheet. And
Mhm.
so and if you take that and use the same model of conservative, low risk investment that can create a rate of return, that would be more than enough to offset any loss to the federal treasury
Right.
for the absence of interest payments coming in.
Right.
And I think it's just a very elegant sort of solution to the problem.
It's not often that people are talking about paying their loans back. I
Right.
mean, you almost never hear about people repaying. And those that are, if we're talking about it, it's because we're struggling to do it. I'm a lawyer, so I'm very open about my balance. My balance now is $179,000. And I still can't make a payment without getting over that interest. And I have, by the way, I have filed a complaint with the Department of Education. The ombudsman welcomed people to share what was happening with them personally. So I shared that I made excess payments during COVID, and they were not applied to principal, they were applied to interest. And so only $10,000 of my $37,000 touched my principal. So I did file a complaint, and you kind of have to, so for everyone listening, because they're like, oh, this happened to me, you have to follow the system. Unfortunately, if you have not filed a complaint, but you're calling your student loan servicer, you have to take all the steps, because even as a lawyer, when there are disputes and you're in front of a judge, they're going to say, well, did you call the insurance? Did you try to contact the other party? Did you try to resolve it amongst yourselves? What happened? So it's very important when we are trying to find a solution that we take all steps. And I'm mentioning that because a lot of our listeners sometimes feel like, oh, I don't even know where to begin. There's just so much money. I'm just going to stop paying. And I just don't think that that's the answer. I think it makes it worse.
Well, I mean, and your complaint is absolutely valid.
Yeah.
Because, basically during the COVID pause, a lot of other people who had the ability or the, strategic sense to try
start
and knock
making a
down their
dent.
principal balance, that was exactly what the Department of Education was telling people. I mean, it was like a sort of an interest-free period.
Absolutely.
At the time there.
Mhm.
And I will tell you, my office is willing to help, sort of,
I appreciate that.
No, please. I mean, I would welcome that opportunity.
Yeah.
Because that's, and
I have screenshots of all my payments, by the way. This is another thing.
And the Department of Education is a public, accountable, which we the people,
right.
And it's not sort of like a private institution you're dealing with. So complaints to ombudsman,
right,
is, that's what it's there for.
Mm-hmm.